The price of 10 grams of gold surged past 60,000 rupees for the first time this week as the global banking crisis gripped the markets. While prices fell in the early part of 2023 on expectations that the US Fed will cut rates aggressively to tame inflation, a string of bank collapses over the past few weeks has increased recessionary calls. These fears prompted investors to park their money in safe haven assets like gold, pushing the precious metals prices by around 8% higher over the past fortnight. The bullion has also outperformed equities so far in FY23, surging 14% against negative returns by benchmark indices. In the times to come, analysts believe the US Fed's interest rate decision may move the prices of gold in either direction.
The gold prices have definitely crossed 6% so far, but the percentage increase will be much higher this year, as we are seeing strong inputs and data which are going to take the gold prices even higher. Now in COMEX we have already seen that levels of 2000 being tested right now currently, and going ahead the next hurdle is 2150, 2100. So comparatively we are going to see the prices of around 62,000, 62,500 easily onto the MCX prices, as also the rupee is also depreciating and in a range where the crude prices are only helping the rupee to not fall further, but beyond that the FIS selling is definitely helping the rupee prices to be on the weaker side. So this is also again going to help the gold prices, and the levels which are going to be quite achievable, which looks around 62,000 to 63,000 into the MCX and 2100, 2150 onto the COMEX prices.
On the flip side, the US Fed's steadfast stance to keep increasing interest rates to bring inflation within comfortable limits may halt the steep rally.
Despite UBS agreeing to buy the beleaguered Credit Suisse and the US Federal Reserve opening dollar swap lines with other major central banks, banking concerns continue to linger. Thus, gold is seeing strong buying momentum. Credit concerns continue to linger as Credit Suisse AT1 bonds worth $18 billion are being wiped out during the US takeover process. Investors continue to fret over the health of the banking system. US 2-year yields have tumbled nearly 150 basis points from the peak in March. Both gold and bonds may fall if the Fed stays on its course of rate hikes. Gold is expected to be extremely volatile. A run to $2025 is possible, but sustainability of this sharp rally is doubtful. If no more bad news and Fed hike is hawkish, gold may fall to $1940 or $1900, as present crisis is more about poor risk management, confidence and liquidity rather than being a systematic threat to the entire banking system.
While there may be some steam left in gold's rally, the medium-term outlook will depend on how the US Fed manages the banking crisis and liquidity in the system. As regards today, the US Fed's interest rate decision and treasury yield movements will guide equity trading.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.